How to find MT for Forex broker for a U.S. citizen by Samuel Ray. Forex brokers offer a wide range of services. Forex brokers offer a wide range of services. More articles. 1. How to open a demo trading account. 2. How to buy Dow Jones futures options. 3. How to buy stocks pre-market. There are more than 60 Forex brokers with offices in the United States that accept applications from U.S. citizens. Most of these offer different services and have different cost structures, which can complicate your search for the right one. Knowing what you want from a broker before you start your search can simplify the process. Make a list of your requirements before you start your search for a broker. Write a list of what you're looking for. The service you receive and the features you gain access to vary from broker to broker. Relevant factors to evaluate include the leverage you require, the minimum deposit requirements for opening an account, whether or not the broker offers trading through MT4, and the commission you'll have to pay when you make a trade. Forex commission is generally paid via spread, which is the difference between the bid and ask price in a particular Forex pair. Some brokers offer tight and fixed spreads, which can reduce your overall trading costs. Use the internet next. Type US Forex brokers into your favorite search engine and you'll be provided with a number of lists and reviews of brokers. Go through the lists and read the reviews. This will quickly give you some idea of which brokers are the most reputable and highlight any brokers you might want to avoid. Ask the community. A large community of traders will be willing to help you make your decision. Type Forex Forum into your favorite search engine and navigate to one of the displayed results. Open an account with one of the forum sites, and you'll instantly gain access to the knowledge and experiences of many traders. Someone is likely to have asked the community about US Forex brokers in the past, but if you can't find what you are looking for, ask the question yourself. Forex forums are a useful way to compile a list of potential brokers as well as an easy way to narrow the list down. Once complete, apply for an account once you've chosen your broker. To open an account, in most cases, this can be done online. Navigate to your chosen broker's website and fill out an application. You'll have to provide proof of address and some valid identification before your account is activated. If the broker you have chosen requires a manual application, print out the necessary forms and mail them to the broker's location. How to backtest a strategy in Forex by David Ingram. Backtesting can give currency traders confidence in new systems. Backtesting can give currency traders confidence in new systems. More articles. 1. How to consistently profit from Forex. 2. How to plan trading objectives in futures trading. 3. How to grid trade Forex. Forex involves the active trading of currency pairs on the foreign exchange market, also called currency trading. Forex presents a distinct set of opportunities and risks compared to other financial markets, such as stock or bond markets. In Forex, employing a proven and disciplined strategy in the marketplace is essential to maintaining profitability over time. Backtesting allows Forex traders to prove strategies and trading systems using real-world data without taking on real risk in the market. Understanding how to backtest a strategy in Forex can help you to avoid major losses when trying something new. Establish strategy parameters. Begin by strictly setting forth what your strategy will be. Determine which indicators you will use and which technical factors you will focus on. Determine your trigger points to enter trades based on your chosen indicators and technical factors. Set forth your stop loss and take profit parameters, and set goals for trade time frames and per trade profit levels and pips. In addition to the technical setup, define your risk management parameters for the strategy, including your maximum loss per day and per trade, the number of losing trades you will allow per day, and your maximum position size. Select pairs to test. Backtesting works best when you focus on a single currency pair at a time. Unlike live trading, backtesting allows you full control of the passing of time, allowing you to move through any time frame at your own pace. Even if you wish to test a strategy on multiple pairs, analyze one pair at a time for greater clarity. Gather past data. If you use a fully featured trading platform, you should have access to a backtesting module that will feed historical price data into your chart window for your chosen time frame at your chosen speed. If your platform does not include a strategy tester out of the box, there may be an add-on or plug-in to add this functionality. If you choose this route, Program the module with all of the information it requires, including the currency pair, total time period, chart time frame and indicators to display. If you do not wish to go this route, obtain static charts of historical price data to analyze. Set the static charts to display your chosen time frame and indicators before analyzing the data. Analyze trades as you go through the historical price data. Look for buy or sell opportunities that match up with your established strategy parameters. When you find an ideal trigger point for a trade, note that trade on the chart, including your stop loss and take profit setup. Using your chosen time frame target, analyze the market's price action immediately following your hypothetical buy or sell point. Take note of the eventual outcome of the trade, whether the market hit your take profit or stop loss points, whether it happened within your time frame and whether you hit your profitability target for the trade. Repeat this process as many times as necessary, using as many individual currency pairs and trades as you wish, to gather sufficient data to convince you of your strategy's strength or weakness. If you find that your strategy does not work out in backtesting, consider tweaking one variable at a time, based on your observations, until you arrive at a profitable strategy. Online investing versus personal broker by Linda Ray. You know yourself better than anyone and may be the best person to assess your risk. You know yourself better than anyone and may be the best person to assess your risk. More articles. 1. Pros cons of the stock market. 2. How to open a demo trading account. 3. How can I practice on the stock market? Online investing offers amateur investors the opportunity to take full control of their own portfolios, eliminating the traditional role of the stockbroker. There are significant advantages and disadvantages to each approach that should be considered by investors when deciding how to handle finances. Weigh the pros and cons before choosing, and perhaps even use a little of both styles. Personal control. Online investing gives you the chance to take complete control of your own portfolio. Trades can be executed immediately during trading hours, as opposed to trading through a broker, who must be notified of your decision to buy or sell stock and then act on those decisions at their earliest convenience. On the other hand, brokers are professional traders, and part of their traditional role has been to act as a safety valve to preclude you from making bad investment decisions. While there is never a guarantee when purchasing stocks, brokers are an informed third party who can offer their own input and perspective. If you are thinking about making a high-stakes trade or a rash decision, you still retain control, but with a tempered hand. Research. Online trading offers you a variety of tools for research. Some online firms even offer professional, state-of-the-art research for no additional charge. These tools allow you to make informed decisions about your own finances. On the other hand, brokers are essentially paid to do extensive market research for their clients, which can save you significant time and effort. Effective brokers function like an advisor or mentor to their clients, bringing their own trading experience to bear on investment decisions and doing the extensive research into the market. Costs. Personal brokers perform a clear service for their clients, and they normally charge substantial fees per transaction, as well as a percentage on overall profits. Online investing companies tend to charge much lower fees. However, you must consider what you are paying for. In some cases, the broker fees might be worth paying if the broker is able to help you avoid unwise investment decisions or give you an edge to capitalize on obscure opportunities that you might have otherwise passed over. Online investing, by contrast, although it may be cheaper, also leaves you more vulnerable to scams, junk investments or misinterpretations of raw data. Third party. A personal stockbroker can be an extremely valuable resource to any investor through their experience, professional connections, access to research and understanding of the market. Brokers can offer highly personalized service to investors through an understanding of the investor's goals, philosophy and risk tolerance. This is simply not available through online trading. On the other hand, stockbrokers are professionals trying to earn money for themselves. Although outright fraud is quite rare, basic economic incentives dictate that brokers will try to take actions and to encourage trades that will benefit their own financial well-being in addition to yours. How to make an intraday play. By Thomas Metcalf. Intraday trading is a high-risk method that can earn, or lose, a lot of money. Intraday trading is a high-risk method that can earn, or lose, A lot of money. More articles. 1. What is a sideways market? 2. What is night trading? 3. Trading strategies for crude futures. If you are considering trying your hand at intraday trading, you have many options available to you. You must choose whether to trade stocks, commodities or futures. Some day traders work in extremely short time periods, even down to minutes, and you must also choose what strategy you will use to trade. Intraday trading is risky, so make your decisions carefully. Trading on the news. Stock prices are affected by economic conditions as well as news about a company and the industry in which it operates. If you track the news, you may find opportunities to profit with intraday trading. Some events, such as earnings announcements, are anticipated well in advance and offer the best chance for an intraday trading profit if the actual figure is out of line with what was anticipated. Other news could be harder to locate, so follow blogs and read articles in trade journals and online postings. Watch to see what insiders do. Insider transactions can give you a heads up about future price movements. Trend trading. If a stock shows steady movement in a long-term trend, you can possibly earn intraday profits by trading the fluctuations that occur around the underlying trend. You can profit from trends going in either direction, buying or shorting a stock depending on the direction of the movement. Look for technical indicators to confirm the existence of the trend. Moving averages, trading volume, MACD, moving average convergence, divergence, and other indicators can confirm that the trend is intact or that it is decaying. When you trade, wait a short while to make your first trade of the day to be sure the trends you anticipate begin the way you forecast. Range trading. Some stocks fall into a pattern of trading in a well-defined range. When the price reaches a resistance level, sellers enter the market and outnumber the buyers, causing the price to drop. And when the price falls to the support level, buyers step in, outnumbering the sellers and driving the price back up. With the price bouncing back and forth between resistance and support, you can make profitable day trades if you can time your transactions well. Be prepared for breakouts, which can occur if the price breaks through the resistance or support levels and starts a new trend. Know your risks before you start your day trading career. Consider the risks involved. Approach what you do with a plan and do not be distracted from it. The Securities and Exchange Commission warns that most day traders lose money in their first months of trading, and many never become profitable. To maximize your profits, you will need to open a margin account that can leverage your profits, but it can also leverage your losses. Never trade more than you can afford to lose. While there are many newsletters and seminars offering hot tips for day traders, the SEC urges caution. Deal only with reputable brokers, and if you have questions about them, get more information by calling the North American Securities Administrators Association at 202-737-0900 or visiting its website at www.nasa.org/aboutus/contact us/contact your regulator. Is there a virtual stock market to practice trades? By Nihar Patel. Reviewed by Ryan Cockerham, Sissy Capital Markets and Corporate Finance. Updated February 10, 2019. Virtual trading is a great way to practice your skills. Virtual trading is a great way to practice your skills. More articles. 1. How to develop Forex trading skills. 2. Day trading tips for the New York Stock Exchange. 3. How to buy stock when the market is closed. There is no lifeguard when it comes to using real money in the stock market. Jumping into the deep end opens you up to all the risks that come with not knowing what you are doing. Practicing is one of the best ways to get the hang of all the complexities of trading in the stock market. There are a lot of options for virtual trading, but to gain the most benefit you have to make the experience as close to real as possible. Tip: virtual stock market trading, also referred to as practice accounts, allow you to explore the world of investing and test a variety of strategies in a simulated environment. Finding a practice brokerage account. A few brokerages provide paper trading accounts that let participants invest with imaginary money. TD Ameritrade offers one through its thinkorswim platform. Thinkorswim is also a trading platform, but it tends to be very dense and aimed at serious professionals. TD Ameritrade also has a simpler interface that is more user-friendly with many tools of its own. but without a paper trading account. Options House offers a paper trading account that is identical to its interface for normal trading. Avoid delayed quotes. If you are using a practice account completely for free, you are likely to receive delayed quotes. This might be suitable for practicing long-term investing, but you need real-time quotes if you are practicing to be an active trader. Even for long-term investing, delayed quotes can be annoying. That's because most practice accounts initiate your trade against real-time quotes in their servers, while showing you delayed quotes, so you have no idea what order to put in properly. Options House offers real-time quotes in its practice account if you make a minimal deposit into a real account. There seems to be no way to trade on Thinkorswim with real-time quotes unless you open an actual account and switch back and forth. There are pure stock market games online that follow the market and are not like brokerages. However, you cannot practice with all the tools that brokerages give you, and they will have delayed quotes. Stock market games are probably the most fun way to learn about trading, but the least beneficial. Every game is different, and their usefulness depends on the specifics. Games can teach you the mechanics of trading, and if they're designed to be accurate, they can help teach how stocks move. Games are pretty pointless for charting. They're either deterministic, or they have planned randomness that rules out chart patterns. These games are useful for only the most basic understanding. The benefit is that you can practice a little in the off hours. Just keep in mind that with games you will not learn how the real market moves, because that would require programming mass human behavior. Important warnings and tips. The weirdest thing about practice accounts is that with the risk of loss taken away, you are free from concern. Playing a game, or practicing without risk, is not the same as the real thing. You might make decisions that you would not normally make. Think about playing any video game. Would you take the risks in your own life that you make your character take? To whatever extent you can, try to make it feel real. Set the amount of money in your practice account similar to what you have to trade. How to buy stocks pre-market by Karen Rogers. Reviewed by Ryan Cockerham, Sissy Capital Markets and Corporate Finance. Updated March 6, 2019. You can trade after the market closes using ECNs. You can trade after the market closes using ECNs. More articles. 1. How to buy stock when the market is closed. 2. How do I place a limit order on a covered call in stocks? 3. How to buy first stock on E-Trade. Trading opportunities don't end just because the stock market closes. Investors can still trade news reports and company announcements using the Electronic Communications Networks, or ECNs. If you have an online trading account, you can buy stocks pre-market if your brokerage firm offers this option. Designed to match up after-hours buyers and sellers, pre-market trading through an ECN allows you to find your desired stock, enter your order and monitor your purchase to ensure its accuracy. Tip: although the New York Stock Exchange and the Nasdaq market open at 9:30 a.m. Eastern Time, eligible investors can buy stocks pre-market through an ECN from 8 o'clock through 9:30 a.m. Eastern Time. Prepare to place an order. Open an online trading account if you do not have one. Be sure the brokerage firm you select allows pre-market trading. Note: when the brokerage firm allows you to pre-market trade, as each firm can set its own hours, before entering a pre-market order, determine if it would be more cost-effective to wait until the market's open to trade. Find your desired stock. Decide which stock you want to buy pre-market. Go to your trading account to order entry page and enter the stock symbol, the number of shares you want to trade, and select buy as the action. Before entering the price, check the current bid, ask range. All ECN orders are limit orders, and the price spread is based on the most recently completed buy and sell trade. You can use this information to select the limit order price that has a better chance of being filled. Enter your order. Find the order box on your order entry page. Under routing, select either pre-market or destination. If you do not make a selection, the order will be deemed as placed for the regular trading session and it will be held until the market opens. Select an ECN from your broker, and route the order by clicking on the trade button. Warning: A pre-market trade placed as a market order will be rejected because the market is not open. It must be entered as a limit order at a specified price to be accepted. Following up with your order, monitor the trade to see if the order gets filled. ACNs fill orders by matching a buyer with the seller, and until a sell order is placed at your price, your buy trade cannot be completed. Try to enter your price between the bid ask range. Trade volume rises when the ECNs start matching pre-market trade orders with regular orders from 8 a.m. until 9:29 a.m. EST. An order entered as good till cancelled, or GTC, will probably be filled during that time. It's important to note that the bid ask spread can be wide and could negatively impact your trade once the market opens. References, tips, warnings. Writer bio. Free, Money Sensei newsletter. Each week, Zach's newsletter will address topics such as retirement, savings, loans, mortgages, tax and investment strategies, and more. Enter your email address. Finance Investing for Beginners. Stock Market Tracking Tools by Jackie Laurie. Web-based tracking tools are among the most useful in portfolio management. Web-based tracking tools are among the most useful in portfolio management. More articles. 1. Google Stock Portfolio Programs. 2. How to look up stocks based on price. 3. Stock Picking Software Portfolio Management Tools. Successful stock market investors expect the unexpected and understand that even the impossible can be a distinct possibility. World events, changing economic conditions and competition are just a few of the factors that either singly or in combination work to create this uncertainty, underscoring the need for active performance monitoring. Assisting you in this endeavor are a number of stock market tracking tools that help you determine when to get in, when to make adjustments and when to get out of the stock market. Web-based software. Web-based tracking tools form the largest and most common category. Within this category are full-feature software programs you can use for portfolio management. While specific tools vary depending on the program, most offer a spreadsheet-style user interface, streaming updates, analysis tools, charting options and a watch list feature for tracking stocks you may want to purchase in the future. Some of the available options include TMX Money and Horizon, both free programs, and Stock Market Eye, a fee-based program that as of the publication date offers a free try before you buy period. Web-based service tools. Sites such as Nasdaq offer information on a single stock, or you can track your entire portfolio. Nasdaq offers a menu of free tools, including alerts you can customize and receive via email, a logo ticker you can add to your computer menu bar, heat maps that track the performance of up to 100 securities and a browser plugin that displays real-time stock quotes. In addition, Nasdaq offers a free portfolio tracker that works much like web-based software programs except that, rather than downloading the program, you create an account and the program remains on the site. Electronic. Add television and radio to your arsenal of stock market tracking tools for both real-time and time delay tracking. Stations such as CNN, CNBC and Bloomberg TV are a good source for tracking specific stocks as well as for getting information on factors affecting the market in general. Although not all the information in this medium is in real time, tickers running along the bottom of your television screen do provide real-time updates. Bloomberg also operates several business-only radio programs that focus on providing both general market and company-specific information. Print. Find stock market information and performance assessments in the financial section of a major newspaper such as the Wall Street Journal and in print publications such as Smart Money. Keep in mind, however, that while tracking specific stocks using print tools is useful for general information and for spotting trends, the information is only as current as of the last publication date. If the information you get from these sources is critical, make sure to verify it before making a buy, hold or sell decision. References. Writer bio. Free, Money Sensei newsletter. Each week, Zach's newsletter will address topics such as retirement, savings, loans, mortgages, tax and investment strategies, and more. Enter your email address. Finance Investing for Beginners. How to Buy First Stock on E-Trade by John Czar. Reviewed by Alicia Bodini, Certified Ramsey Solutions Master Financial Coach. Updated February 19, 2019. E-Trade can be a convenient and low-cost option for placing your first stock trade. E-Trade can be a convenient and low-cost option for placing your first stock trade. More articles. 1. How to withdraw money from my mutual fund. 2. How do I make a stock market equity trade? 3. How to buy common stock. E-Trade is an online brokerage firm that was one of the pioneers of internet-based investing. Fundamentally, the steps to making a first trade with E-Trade are similar to those for any land-based financial institution. The main difference is that with E-Trade you'll conduct your transactions online, rather than in person. You can make your first trade with E-Trade from anywhere with an internet connection, and you won't have to speak with anyone or hear a sales pitch before or after your purchase. The cost of your trade will likely be lower than with the traditional brick-and-mortar firm as well. Open an account. E-Trade allows you to complete all of your account application forms online. Start by clicking the Open an Account button on the E-Trade homepage. Choose the type of account you want to open, such as a regular investment account or an individual retirement account. You'll have to provide the same information as if you were opening an account with a traditional firm, including your name and address, date of birth, social security number and relevant financial information, such as your employer's name and address. According to the E-Trade website, the whole process shouldn't take more than 10 to 12 minutes. Find your account after you receive your account number. Deposit money into your new E-Trade account. You can fund your account with either a check, a wire transfer or the transfer of another account. E-Trade also allows Deposit Swap, its quick transfer service, which is an ACH transfer of funds from another account, such as your checking account. Research stocks for purchase before you pick a stock to buy. You should analyze which stocks are most likely to help you achieve your investment goals. Some stocks offer the potential for high returns but carry high risk, while others are less exciting but more reliable. Look at analyst reports, company earnings, market trends, the price and valuation of the stock and other factors to help you pick the right stock for your account. This step is particularly important if you are using your investment funds to buy only one stock. Choose your method of investing. E-Trade lets you buy stocks either online or via mobile device, such as a smartphone. You must download an app if you want to trade stocks on your mobile device. Use the order entry platform. Go to the Stocks tab of E-Trade's order entry platform. Enter the order type, which will be buy for your first stock trade. Enter the number of shares in your order, along with the stock symbol you want to purchase. If you want to execute your order immediately, enter market under order type. Otherwise, select the appropriate time or price modifier, such as market on close or limit. If you select a limit order, you'll have to enter the price at which you want to buy your stock at your limit price. If you want your order to last longer than the current day's trading, enter a time modifier, such as good for 60 days. Review and finalize your trade. After entering all relevant parameters, click Preview Order. Review the order, then click Place Order to make your first trade. References. Writer bio. Free, Money Sensei newsletter. Each week, Zach's newsletter will address topics such as retirement, savings, loans, mortgages, tax and investment strategies, and more. Enter your email address. Finance Investing for Beginners. How to invest money with investment banks by Karen Rogers. Investment banks help individual investors achieve their financial goals. Investment banks help individual investors achieve their financial goals. More articles. 1. How to open an account to futures trade. 2. How to invest in Dow Jones Select Dividend Index Fund. 3. How to buy overseas shares. Investment banking is dominated by market heavyweights Morgan Stanley, Goldman Sachs and JP Morgan Chase. Best known for taking private firms such as Facebook public, investment banks are notorious for earning high fees and providing their investors with excellent returns. Individual traders can take advantage of investment banks' market savvy and global reach by opening an account and investing in their financial products or purchasing stock in the company. Go online and pull up a list of the best investment banks for the current year. Select the top-rated investment banks that interest you and visit their websites for more information. Compare their investment vehicles, the minimum amount needed to open an account, and the applicable costs and fees. Choose an investment bank and contact the firm online or by phone. An investment banker will talk to you about the firm's investment opportunities and either email an application to you or send you a direct link to an application website. Complete the application and return it, along with the required personal identification and tax documents. Find your account after it is approved and opened. If you want to invest in the bank's financial products, take a moment and review the online prospectus for the firm's mutual funds and bond portfolio selections. You can also take advantage of the firm's investment management services if you meet the bank's high income threshold. Consider trading the investment bank's stock if you do not want to open an account. Use your stock screener or go to a free online stock screener to find the investment bank best suited to your trading criteria. Narrow down the list and compare the financial statements for each firm. Go to your online trading account to order entry page. Enter the desired investment bank's stock symbol, the number of shares you want to trade, and select the action, buy or sell. In this case, buy. Enter the trade and check your account to see that the shares have been